Hello traders, and welcome back to the channel. Today, we're doing a deep dive into Bitcoin's current price action using a multi-time frame analysis. We'll start from the daily chart to establish our overall bias and then drill down to the 15-minute chart to pinpoint a potential trading setup. Let's get right into it, okay? Let's start with our highest time frame, the daily chart, to understand the macro trend. As you can see here, the market structure is fundamentally bullish. We have a clear break of structure, or BOSS, where the price broke decisively above a previous major high. This confirms that the buyers are in long-term control. However, after putting in that new high, the price has started a natural corrective pullback. Notice this move down labeled sweep. Price has just swept the liquidity resting below this recent swing low. This is a common occurrence where the market takes out stop-loss orders before a potential reversal. Our key area of interest is this blue box labeled FVG, which stands for fair value gap. This is an inefficiency in the market that often acts like a magnet for price. So, the narrative on the daily chart is overall bullish trend currently in a bearish pullback, sweeping liquidity as it heads towards a key support zone, the FVG. Now, let's move down to the 4-hour and 1-hour charts to see how this daily pullback is unfolding. The 4-hour chart clearly shows the bearish price action of the pullback. We see a series of lower highs and lower lows. The line drawn over the price action highlights the targeting of trendline liquidity. Essentially, the market is moving downwards, inducing traders to sell before potentially reversing critically. We see the sweep of the significant low, which corresponds to the sweep we just identified on the daily chart. The 1-hour chart confirms this bearish order flow. We have a clearly defined recent high and low. The move marked with an X is another depiction of the same liquidity sweep below the previous low. So, our intermediate trend bias is currently bearish, perfectly in line with the daily pullback. This is where it gets interesting. After a higher time frame liquidity sweep, we watch the lowest time frames for a sign that the trend is ready to reverse, even if just for a short-term bounce. Let's zoom into the 15-minute chart. On this chart, we see the price taking out the low, marked with an X now. We are looking for a chalk, which means change of character. A chalk occurs when the price breaks the most recent lower high, giving us the first signal that the bearish momentum is weakening and buyers might be stepping in. This chart outlines a potential long trade based on this concept. The trigger, we wait for the chalk to happen. The entry, we would look to enter a long position on a pullback into this blue demand zone, which is an area where buying interest is expected. The stop loss, our stop loss, would be placed safely below the low that performed the liquidity sweep. The take profit, the target is set at a higher resistance level, aiming to capture the potential bounce. So let's summarize the complete story the charts are telling us. Daily TF. We are in a macro bullish trend, but currently experiencing a bearish pullback towards a key support level, the FVG. For H and 1 HTF, these charts confirm the bearish nature of the pullback, which just swept significant liquidity below a key low. 1.5 MTF, following this high-impact liquidity sweep. We are now looking for a change of character on the 15-minute chart to confirm a short-term shift in momentum and provide a low-risk entry for a long position. This is a classic top-down analysis. We use the high time frame for our directional bias and points of interest, and the low time frame for our precise entry trigger. We are essentially betting that the liquidity sweep on the higher time frames is enough to fuel a short-term bounce.
Today, we're looking at Ethereum ETH, USDT, using a top-down approach, starting from the daily chart all the way down to a 15-minute entry plan. Let's see what the charts are telling us. First, let's establish the overall trend on the daily chart. The market structure here is clearly bullish. We have a confirmed break of structure, or BOSS, where the price moved strongly past a previous high. Following that impulsive move, the price is now in a healthy pullback. It's currently testing a blue zone marked FVG, which is a fair value gap. This is a key area of interest where we can expect buyers to show interest again. So, our macro bias is bullish. Now, let's zoom into the 4-hour chart to analyze this pullback. The 4-hour chart shows the journey from the high. Price has been trending down, sweeping liquidity along the way, which is normal for a correction. The most important feature here is that the price is now entering a major order block. This is a significant support zone where a strong buying wave originated previously, making it a high probability area for the bearish pullback to end. Now that we are in our key area of interest, We need to look for signs that the bearish momentum is fading and buyers are stepping in. For that, we turn to the 1-hour chart. On the 1-hour time frame, we can see the price reacting to the order block we identified. Crucially, we see a recent break of structure boss to the upside, although small. This is our first real confirmation that the market's character is potentially shifting from bearish to bullish at this level. This gives us the confidence to start looking for a precise entry. Finally, let's drill down to our execution time frame, the 15-minute chart, to map out our trade. This chart gives us a clear and refined plan. The price has pulled back into a 15-minute order block OB, which sits inside the larger time frame zones. This provides a precise, low-risk entry area. The trade idea is as follows: entry, a long position from within this blue order block. Stop loss, placed just below the low of this order block. Take profit, the target is the recent high, which is the boss level. The drawn arrow illustrates the expected price movement, a bounce from our entry zone and a rally to break the high, signaling a continuation of the larger bullish trend. So, let's quickly recap the powerful confluence we've built. Daily chart gave us a clear bullish macro trend. 4-hour chart identified a high probability order block for the pullback to end. 1-hour chart provided the confirmation with a shift in market structure. 15-minute chart gave us the precise entry plan with a clear target. By aligning all these time frames, we can build a high conviction trade setup. Remember, this analysis is for educational purposes only and is not financial advice. Always do your own research and manage your risk.